backdoor Roth IRA. I think backdoor kind of has some negative connotations with it. It sounds shady, but it's completely legal when executed correctly in this sense. And it's one of the more effective strategies for high income earners. Here's how it works. You contribute monies to a traditional IRA, and even though you might not get a deduction for that, you then take those monies and convert them over to a Roth IRA. And if you're in a state that doesn't have state income taxes, well, you don't have to pay state income taxes. So you'd pay less taxes than a state that you would have income taxes. Now, the backdoor Roth IRA was up for elimination with the Build Back Better Act, but for the time being, it looks like it's here to stay. So if you plan on pursuing this strategy, there's a couple different factors I would pay attention to, and they're relatively similar to the ones we discussed for other strategies. Number one being, is my tax rate going to be higher in the future than it is today? Another big one might be, will the country's tax rates be higher today or in the future? And I recognize you might not know that, but if you don't have much tax diversification, it might be worth considering this a little bit more to build up more Roth monies. And I would say a few other just considerations on this. When do you plan on withdrawing the money? There are some rules around that with the backdoor Roth IRA and Roth IRAs in general as far as how long the money might need to sit there. And lastly, how does this factor into my current tax and just retirement plan? As always, we will model this out for somebody just like any of the other pieces to figure out, is this a strategy worth pursuing?